You've got this big inflation shock that's coming at us. The probability of runaway inflation in September, October is pretty high. Inflation above 10% in the United States would be pretty crazy. And the probability that's gone from like 1 or 2 or 0% to maybe 20, 25%. And then in terms of inflation being in that 4 to 7 bucket, the probability I think is about 80%.
So you believe what we're seeing right now is a short-lived relief rally?
I think you get about a 20%, 25, 30% drawdown between now and say September.
That's a pretty big statement, Larry. I love it when someone gives a forecast and has the gumption to give a forecast and a timeline.
The players in Washington, they cannot be honest with us. They're almost like the pilot on the plane with an engine that's on fire. They're going to say, ladies and gentlemen, stay in your seats, everything's fine. They want the fannies in the seats. The only way you get out of a $39 trillion debt hole with interest that's now going to be above $1 trillion with now spiking inflation, the only way you get out of that is to massage interest rates below the rate of inflation, and that's called financial repression. It's great for hard assets. China and all of these agents ripping the valley off, and it's basically going to dilute the return on invested capital. I think what would shock the market is another deep-seek moment where you actually see China with an advantage in terms of AI, where they've stolen our intellectual property and they've actually passed us in certain areas in terms of the race for general intelligence. That would really create a shock. The Mag 7 could potentially drop 50%, 50%. Hard assets are destroying the Mag 7. The Mag 7 is a joke, unchanged since October.
So what does that break the gloss moment then mean for gold? And then silver and then equities, but let's start with gold.